Hey guys, good morning, everybody. Today is Friday, April 15th. This is going to be our mentoring session for today. I'm going to go ahead and set up the room real quick, then we'll get started with the session. So there's a couple things here to wrap up. Good. All right, a couple more things here. All right, solid. Everything's good for the most part. Let me get this link sent out to you guys here in the premium, and then we'll get started with the mentoring session for this week. Hey Kenny, good morning. Man, it feels kind of weird not having a live session this morning, huh? I woke up on time too. I was gonna go on live, but I pulled up the charts and they're not even moving. So market's like really closed. I didn't realize it was gonna be fully closed. Thought it was gonna be still moving a little bit, but it's completely closed today. We got a few more minutes for people to join in. It's still kind of early. It's 8:55 right now. Yeah, I know, right, Kenny? Well, I'm going to do this first. I'm going to answer one of the questions that one of our members asked to answer. This is for Randy. So let me go over here real quick to opening price yesterday. I'm going to mark up a couple things and then we'll go over the questions shortly. Hey, Kenny, Scotty, good morning. All right, so let me just mark up the liquidity here real quick and then I'll explain the question that Randy had. Let's go back a little more and I'll just use this right here. Hey, Marlon, morning. Happy Friday. Morning, Barack. Morning, everybody. Happy Friday, everybody. I was just telling Kenny it's kind of weird that we didn't have our mentoring session today, right? I mean, our trading session. I got up this morning and I just checked the charts and they were still closed. So there's like no point in me going on, but it is kind of weird because we haven't had a full day like this where we haven't had a trading session. I mean, even during the holidays, we still traded, I think, like even during Thanksgiving and during Christmas and stuff, aside from like Christmas Day, but like Christmas Eve, Thanksgiving time, the market was still open. It was just really slow. Yeah, Brock said, yeah, check the charts, tried trading and gave it up. Yeah, I mean, it's all right. But anyways, guys, so I'll give it a few minutes for people to join in. It's only 8:57 right now. We're scheduled to start at 9, but I'm going to go over this one question that Randy gave me that he wanted me to cover in the beginning because he couldn't make the session today. So basically, Randy's question here was sometimes price will go and break the highs here, and he was asking that whether he should delete the high lows or just leave them there because he thinks they're relevant, later on. Quick answer to that question is the reason we remove them is because when price comes back down, like for example here, price pushes up and price ends up coming back down and pushes back up, what's going to happen right here? It's going to create a new low, right? So this becomes irrelevant because there's going to be a new low there anyways. So that's why I don't really do it. It'll give you a messy chart because, like, for example, if you have another low there, you're going to have a bunch of like lines all over your chart, right? You can't see anything. So that's why I don't keep them on the chart. So let me just show you an example here of like when that does happen. And I'll color the lines of different colors so that you guys can see how things, kind of change. Okay, so price broke right here. There's another high right there. I'm only going to mark the ones that are established. So price pushes up right there. And then we'll just keep drawing the, as price comes around. So for example, here, price broke this high right here, and there's another low right there. And I'll just color that red so that you guys can see the difference. And as you can see right here, price comes back down, it rejects off that point. And when it does that, it just creates another low right there, right? So as you guys can see at this point, it just doesn't make sense to keep these lines up here because these are now relevant. And this is now the new low. So it's just up to preference. I mean, if you guys want to keep them up, sometimes I do keep them up for a while. Like if you guys have seen me on the live session, I do keep them up. I don't delete them right away, but sometimes, once they just become irrelevant, I just delete them. Because the thing is, if you keep leaving them up, you're just going to have so many lines on here and you're not going to know what to look at. So, I mean, it's up to preference. If you guys want to keep them up and just use them for like future reference, like again, for example, if we deleted this one right here, there would just be another line right there, right? I'll color that like green. And you'll just have a ton of lines all over the place. Like there's a low here. And then if you were to draw another one there, it's just a bunch of lines and it just becomes a huge mess. If that was something that people wanted, you guys can use the K2SR instead of the high-low indicator. But as you guys can see, it just becomes a huge mess. Whenever price comes back down, it creates a new low, which is going to be somewhere near the previous low or previous high. And you're just going to have new levels anyways. So that's why it's a bit irrelevant to keep these up. So I just wanted to show you guys. And this is specifically for Randy because Randy wanted me to go over this before the session started. So other than that, if you guys have any other questions, feel free to put your questions in the chat and then we can go over whatever questions you guys have. It's 9 o'clock now, so the session has officially started. I'm gonna go and clean this up and I'll go over the next questions on the list. Hey, Mauricio, morning. Yeah, no, definitely here to help you guys out with this. Let's see, Motivated's asking, what's up, Sean? Got a question about the DOM. I wasn't able to find a solid video explaining it properly. Do we put the points we are trying to target in the stop loss and TP, for example, 30 stop loss, 60 TP, then click buy or sell? Thanks, bro. Hey, Swally. Yeah, so for the DOM, on the left side, well, depending on what broker you're using, I use FTMO. I can't say exactly what numbers work for other brokers because I've only used it for FTMO. But on the left side, you're going to put your stop loss. Like, for example, you wanted to have your stop loss at 30, right? I'm pretty sure you probably mean 300 because the spread is usually like 100 pips. So you probably need a bit more than 30 pips. You probably need to go for like 300. So if you wanted to put 300 pips and using FTMO on the left side, you would put 3,000. It's technically because here's how the numbers work on not just FTMO, but in general. So on MT4, say you want 300 pips, right? But on MT4, or say, for example, you want to go for 300 pips, but on MT4, it looks like this, 300.0 pips, right? So on the DOM, you can't put a dot there. So instead of putting a dot, you just put 3,000. You're basically just putting an extra zero in place of the dot. And that's going to be setting your distance from like where your entry point is. So same for the TP. For your TP, you said you have a 60 TP, which I'm assuming you're referring to 60 points. 60 points is equal to 600 pips. So instead of putting 60 in that right box, you'll put 6,000, which is going to be equivalent to 600 pips. And then when you want to enter the trade, so I'm just going to show you an example of how it works. So say, for example, you're entering the DOM, like right here, right? Say this is where you're entering your position. When you set your TP, well, when you set it to like 300 and 600, how you were just mentioning, I'll just put it right here. So as soon as you enter the trade and you enter buy or sell, if your TP is at, or your stop loss is at 300 pips right here, this is where your DOM is going to set it up. So as soon as you enter the trade, like say you enter right there, your stop loss is going to be automatically set right there. And then your TP, which is 600, is going to be automatically set right there. So that's pretty much it. Once you hit enter, you'll be in the position, price will move around. If it's your stop loss, it'll pull you out. If it's your TP, it'll pull you out. That's how you would do it. I can't show you on MT4. Well, I can show you even if I wanted to because the market is closed, but that's basically how it would work. As soon as you hit buy, you'll be in the position and it'll move to your TP stop loss versus vice versa. If you enter a sell, it'll enter your position right there. And then your TP stop loss will be automatically set. Yeah, no problem. Yeah, try on demo to make sure that it works properly. You don't want to try it on your live account, then you end up putting too big of a number, too small of a number. But for FTMO, you just got to add a 0. So if you're doing 300 pips, you want to add it to, you want to make it 3,000. And then for your TP, if you want to have 600 pips, you just put 6,000. It's just going to be an extra 0 to cover the extra decimal. All right, so if you guys have any other questions, feel free to put your questions in the chat. Just a reminder, this session is going to go on for as long as you guys have questions for. So if you guys don't have questions, this session is not going to last long enough. So if you guys have any question, any question about any of the strategies, any questions about trade psychology, FTMO, anything really, anything that you guys need help with, I'm here to help you guys out to make sure that you guys actually get this stuff down. But I can't help you guys unless you guys ask the question. So any question you guys have, just drop them in the chat and then we'll go over whatever you guys want me to cover. So I'll just sit around for a bit, see if any questions come in. I don't think I have any other questions here. I think Randy's the only person that gave me a quick question. All right, Fahad said, can you explain the double body again, Sean? Yeah, definitely. So let me go over here and see if I could find one for you guys. Looks like there's one right there. So Fahad, did you want me to go over the strategy or just show you like what a double body looks like? There's one right here. So if you're just looking for like what a double body looks like, if it's really difficult, just get a horizontal tool, use the magnet tool, and then draw a line at the body. If it lines up with the body, then it's a double body. Right there. So this is how you would identify a double body. If you saw an entry like this, then you would enter a sell right there. But I think the stop loss would be too close. Or I mean, technically, if you really wanted to go for like a really quick move, and you're applying the V1, it just depends on like how you're applying it, right? If you're applying it where you're going for like a really quick TP and you just want to go for the 1030, you don't really care like how far the high is, because you can. I've done this before and it works perfectly fine. If you see something like that, that's going to be the entry because you're looking for the high low. You have the high here, you have the low right here. You're basically looking for I thought I updated this. Sorry, let me just update it real quick. Confirm a double wick rejection or double body rejection. I think this is easier. So let me just update this real quick. This is K2 1 minute variation. 1 minute. All right, so basically right here, you're going to identify the high low. You have the high here, you have the low right here. You're looking for either a double wick or a double body, right? So for example, here, there's no double wick, but there is a double body. So with that said, you just want to make sure that there's a pending momentum in the direction of the trade. So in order to do that, you want to look back to see what the most recent momentum signal was. Right here, we have a buy momentum signal. So the next one has to be a sell. So that's going to fit the requirement here for a pending momentum in the direction of the trade. You're looking for a sell. So you want momentum to push downwards to, pretty much push right to your TP. After you have that set up, you enter on the open of the falling candle, which would be right there. You let it run, pushes around a little bit, and there you go, full TP off the next candle. And this is why you want the momentum, because say, for example, your TP doesn't get hit here. It's all good because you have the momentum coming and it just shoots right through. So this is this is an example of the 1 minute variation. It's just going to be a variation to the V1. It's just a different requirement. Let me see if I can find one more other example here to show you guys, because this strategy is really simple. It's like super simple. I feel like a lot of people do really well with it. So it's definitely a good one to look at. I didn't put the requirement here. I got to add another requirement here too. You also want to trade in the direction of bias. Let me add that to it. So I've been updating the strategies here, so I haven't really saved them. So you can confirm high low, or we'll add this as the first one. It's not always going to be it's not going to be like a set in stone requirement, but it's going to be one that you guys can use. Like, it's not always going to be required, but it's one that you guys should always take into consideration. So confirm overall bias, which is going to be retail sentiment. We can't do it right now because the market's not open, but you guys know exactly what to look for. Let's update these here. So as we go along, I'm going to keep updating these because I'm making the new videos. I did make the new breakout video, so I don't know if you guys saw it, but it's up now, the new breakout video. That pretty much just simplifies everything. So the K2 1 minute. All right, so right now we can't confirm the bias because the market's closed, and again, this isn't going to be like a hard set in stone requirement, because you guys can see here that, there might be a different bias going on and the trade still works perfectly fine. So let me just go over here real quick, show you another example here. And the reason why we add that is because we don't want you guys to take every single trade. Not every single trade is going to work. Majority of the time it does work, but you don't want to take every single trade. You want to be somewhat, picky with what trades you're taking. So again, right here, same situation. We confirm the bias. We'll just say the bias here is bullish overall. And you can kind of see here, because it is bullish, you can see it pushed up, came back down. It's pushing right back up here. Trend meter is green. Price was above the pivots. It's just, slightly in the middle right now. But for now, we're just going to assume that the bias is bullish. So with that said, you want to confirm the high low. We have the low right here, the high right there. You want to confirm that the candle following the high low, which is, this is the nearest one right here, is either a double wick or a double body. You can see from this point right here, it's not a double wick because they're different sizes, but it is a double body. So after that, you can enter, or the next step is you want to confirm the pending momentum in the direction of the trade. So the previous signal here is a sell signal. The next signal has to be a buy. So since you're looking for a buy here, it's going to fit the requirements. You'll enter a long position right here. And then just depending on how you want to do it, there's different ways to set your TP stop loss, but if you just want to go for the basic 1030, which is what everyone does anyways, that's all you would set it to. You'll let it run, pulls back a little bit, pushes up, and full TP right there. So as you guys can see, it's a very simple strategy. It's not difficult at all. That's pretty much the 1 minute variation. You just change one thing instead of the double wick to double body. So other than that, hopefully that answers your question. Fahad. Sam said, does it have to be a green and red candle opposite, or can it be? It's impossible for it to be too green or too red because you're not going to get a double body that way, Sam. So quick answer to your question. So you have to get the opposite because you can't get a double body where they're going to be next to each other. Like if you have a green candle here and you have another green candle, it's going to be, pushing up because it starts from the same level. So it's impossible for you to get, it's going to be like this. So if you get two green, it's not going to be a double body next to each other. It's impossible to have that. So it has to be opposite. Like for example, right here, this is a double body because price pushes up and then it just stops at that point, the opening price, and it comes back down. It's basically a reversal pattern. And if you get a two red, like for example, you get two red right here, it's going to be impossible for this part to be up here because the opening price is going to be right next to it below. So does that make sense, Sam? Just want to make sure before I move forward. I'm going to scroll up and see if I have any other questions regarding that strategy before I move on to the next question here. Gotcha. Okay, perfect, Sam. Next question is from Kenny. Kenny's asking, can you go over the drawdown? So what do you mean by that, Kenny? Like by drawdown? Are you talking about FTMO? Because I know you had the confusion with FTMO while like the other mentoring sessions. I'm not sure if that's the same thing that you're still confused with. Is that what you're confused with, Kenny, or is there something else about drawdown? Because I just want to make sure I'm answering your question properly. Okay, so FTMO. So this, I don't know if have you talked to FTMO about it? Because last time we spoke, I was wondering if like you asked them if they had a better video explaining it because I mean, it's really, really simple, but for some reason, a lot of people like don't get it. So let me, again, right here, let me just show you. Like people don't understand that you can't go below a certain point, right? People think you can hold on to it and then it can go back up, but it defeats the whole purpose of the requirement. There's a drawdown limit because they don't want you to go past that number. So let me just try to give you guys an example here because I only know 200K because that's all that I use. I don't use anything below that. So a 200K account. Yeah, Kenny, I don't know did you ask FTMO? Because Mauricio said they do have a good drawdown video on FTMO. So I'm not sure if you looked at that. I'm going to try to explain it as best as possible, but I don't know how other way to explain it because it's such an easy topic to like kind of grasp. So I'll start off and I'll try to explain it. Otherwise, you might want to go check that video that Mauricio has. Unless you have the video, Mauricio, is it like a YouTube link or something? Because that might be able to help Kenny a little more because they probably break it down in different types of words. So basically for 200K account FTMO, you have a 10% or you have a 5% daily drawdown limit, which is equal to 10K. You have a 10% max drawdown limit, which equals 20K, right? So, I mean, what this means here is that, and I'll use an example here. For example, count at 200K, right? You start the day at 200K. You can never go below 200 or 190K within a day. And that's pretty much it. That's like one example right there. And I'll try to write another example here to help you with this. So this is example one. Example two, account at, and I'll just change the numbers so that this could maybe get your mind going so you kind of understand a little better. 200K, you can never go below, you can never go below 200K within a day. Does that make sense, Kenny? I'm trying to see if like this even makes sense to you, because if it doesn't, I'm gonna have to change the way that I'm explaining it to you. So basically for your drawdown limit, you can't lose 5%, which is 10K on a 200K account. if you're at 200K for the day, like you start a brand new account, you can never go below 190K because you can't go below the 10K limit. If you go below that, like you can't take a trade and then pray to God that price is going to come back to you, right? You can't go like down 100, like you can't go all the way down to like 180K and just pray that price comes back up, because they don't want traders like that. If you trade like that, you're a gambler. You're not a trader because you're not really managing risk. And I think that's a problem with a lot of people. They think that they can just take a trade and just hold it like forever. And then one day, you know, if this happens tomorrow, next week, next year, it'll come back up. So FTMO will be thankful for that, but they're not, because they don't want you to be using their funds and basically just gambling, right? Because that's really what you're doing. You're gambling. If you're trying to buy and then hold it, or you want to sell and then hold it for you know, X amount of period, because you're basically just waiting for the money to come back, which it can never come back at some point. So does this make sense to you, Kenny? I want to make sure, because if this doesn't make sense, I want to try to change the explanation here. But it should make sense because it's very, very simple. For the max drawdown, for this, you could just, you can never go below 180K, right? And this is like the easiest one. I think this is the one that a lot of people have issues with. It's a daily drawdown, because people think that they can take a trade and then just hope that it'll come back at some point, but it doesn't work like that, right? It's like you're not gonna give me 200K, right, Kenny, and say, hey, Sean, you could only lose 10K a day. And then I'm like, all right, I don't care what Kenny says, and I'm gonna go and lose 50K a day. But then you're gonna keep messaging me, and I'm just gonna keep ignoring you because you want me to stop trading. And then say like a year later, it goes back to like 50K in profit. And then I'm telling you, well, yeah, you should be thankful, Kenny, right? It doesn't work like that, because the thing is, you set rules for a reason. FT1 sets a rule where you can't go below this point because they want you to manage risk. They don't want you to get lucky and make money for them. They want you to actually know what you're doing and make money for them. So yeah, hopefully that makes sense. I mean, if there's still confusion, Mauricio sent the YouTube video right there. But this is a common issue. I feel like a lot of people that don't understand risk management and don't know how to trade properly have an issue with this, because they think they have like 200K to just play around with, right? You don't have that much to play around with. You technically only have 20K to play around with. And then you can only have, you know, 10K to play around with for the day. Because it's just risk management, right? It's basic risk management. You're not going to like bet on somebody that is gambling, right? You want to bet on someone that is actually consistent and knows what they're doing. So, yeah, other than that, let's see. CT said, if you have 200K, lose one trade of 5K, you're at 195. 10 minutes later, if you enter a trade in negative 6K and not closed. Yeah, no, exactly. So CT gave a more technical breakdown of it. Let me check your screenshot, because you sent a screenshot here. Yeah, so you're fine. It looks like for your max daily, you're at 1,435. So this means that at whatever point in time, this is how much you've gone down to. You haven't gone down past that, which is good, because using proper risk management. So you're good. I mean, if you ever, so here's the thing, if you go down to like, I don't do the math here. Let's see. The math here is that you're at 200K. And you lost 1, 4, 3, 5, 6, 7. So you basically got down to 198,564. So from my breakdown right here, you kind of see that, you never got down to that point where it's 190. Say, for example, if you go back down, so you say you're back at 200K, and then say tomorrow you go down 3K. It doesn't mean that you lose it. It just means that you want to draw down 3K. You're going to go down to like 197. This number here will change. So it's going to be 1,400. It's going to change to 3,000, because it's going to show what your max daily loss was overall for this challenge or whatever account that you're doing. And it'll be the same for your max loss over here. These numbers don't change. So I feel like a lot of people get stuck up on this matrix here. Just don't look at the matrix. I feel like people will look at the matrix and be like, hey, how come this number's changed? Because you went down in a drawdown. But a lot of people don't get that. They think that just because it has a negative number there, they think their account's still negative, but that's not the case. So what I would recommend is to just don't look at the matrix, guys, because a lot of people don't know how to read the matrix and they don't understand what these numbers mean, and they get tripped up about it, but it doesn't really mean anything. The main thing is that you just don't beat your daily loss or your max loss. And I'm sure there's a lot of people in here who have the same issue. They look at their matrix and like, what the heck is this? You know, or they're like, oh, why is my max loss say 5K, but I'm in profit? Because that's your max loss for this challenge. So just don't make it too complicated on yourselves, guys. I feel like a lot of people make things a lot more complicated than it really is, and they start to freak out about the little things. So you're fine, Kenny, and I think you should be fine as well. Just make sure you never go below 10K a day. I mean, this is your magic number. You should know how far you go down, right? Just check your trades for the day. Make sure you never go below 10K, and then you never want to go below 180 overall. So other than that, I think we're good. Yeah, Brock said I struggled to understand it, but I got it by repeating the live trades. Yeah, no, and it helps because you can actually count how many trades that go through during that day. So other than that, let me scroll up. I think that's it for the questions with drawdown. And let me scroll up. Okay, so next question over here is from Marlon. Okay, so Marlon's asking, can you go over liquidity? How do you identify it? So that's really simple. I'll just do it from here. Market is closed, but I'll show you from here. Like if price was still moving at this point, this is how I would draw liquidity. I would turn on the K2 high-low indicator. It's off right now. I turn on the K2 high-low indicator. I grab the horizontal ray. I use the magnet tool right here to just link onto here, and I just draw lines where the high lows are. So all lows are right here. All the highs are right here. But you're only drawing the highs and lows that have not been broken yet, right? Have not been touched. So here's an example of one that you would not, let me just go up real quick. Yeah, for example, right here. These lows right here, you're not drawing lines because if you draw a line there, you can see price already cut through it, right? You only want to draw up lines where it hasn't been tested yet. So price hasn't tested this point, price hasn't tested this point. This is where liquidity is sitting. And you just keep pushing up right here. And the reason why we're able to identify this as liquidity is because you may know or you may not know. I feel like this is something a lot of people don't understand. When people enter trades, if you guys ever followed any other type of strategy, or if you ever learned from anyone else, where do people usually put their stop loss? At the previous swing, right? The previous swing means the previous high or the previous low. So like, for example, there's prices right here. The previous swing high is right here. So if people were to enter a sell at this point, their stop loss is going to be right here, right? And the reason why it's liquidity is because what happens when a lot of stop losses get hit? That's when price starts to go on a stop loss hunt, right? Price will hit this point, and then when it gets there, it triggers everyone's stop losses. And then what happens when the stop losses get triggered? The opposite orders come in to fill it, and it pushes it up, right? That's why it's liquidity. It's a really simple concept, but it's crazy because like a lot of people don't know about it. Like they don't realize that, like they've heard of the term stop loss hunt, or they've heard of the term place your stop loss at the previous swing or the previous high or the previous low, but people don't realize, like, they don't use the logic to think like, okay, so what happens when the stop losses get hit? Price pushes, right? Because there's liquidity in the market. It's liquidity right there. When the stop losses get triggered, the buys, they switch to buys, or whoever, the trade swap. So when they swap, it pushes price up because all these sells turn into buys and price just pushes up higher. It's like basic logic, but I mean, I guess it's not that basic unless you really think about it, but that's how like these liquidity areas work. And that's how they always play out. Like, let me show you an example here. Well, basically, Marlon, this is how I would draw it. And then these over here have already been tested. So you're not going to draw this because if you drew a line there, it's, it's already broken past it here. So it's relevant. But let me show you like how it works. Okay. So let me show you an example over here. I guess you go like right here. Okay, so I'm going to draw liquidity right here, and then I'm going to go back, and then I'm going to show you guys like the logic behind it, because I feel like a lot of people don't get the logic behind what I just explained. Some people do, some people don't. It's fine if you don't, but I'm going to make sure that you guys understand it this time. So here's an example right here. Price was in a bullish trend, right? So price was in a bullish trend at some point over here. And if we rewind here and just use this for an example, this is why I said a TP. You know, a lot of people don't like to use TPs and stuff, and they like to just trail it up. But say, for example, someone enters a buy right here, right? And they put their stop loss like right here at the previous swing. And they want to go for like this huge push, right? You see people do this all the time. They have like 31 to 1 or whatever risk reward, which is okay. It's cool. You know, sometimes it plays out, sometimes it doesn't. But people usually do this to ego trade, right? They just want to show you that, oh, they caught like some big trade, but then they don't show you that they lose like 100 trades after that. Because these types of moves, you don't catch them very often. You probably catch them like maybe once a month, maybe a couple of times a month. But other than that, the person that's taking these type of trades, they're losing majority of the time, because they're just like, basically they're trying to find that this big push here. So when you see people take trades like that, like sometimes they'll go for like a huge push, like something like that, right? I'm sure you guys see this all the time. And a lot of times when people do draw this up, it's like a late review of the trade. It's not like they've done it live. It's like they see it happen and then they draw it later. But this is how the liquidity works. So price pushes up right here, and then price kind of bounces around this area. Okay, so price is around here now, right? This person, like for example, this person didn't hit their TP and they're still holding on to the trade. This is why I always tell you guys to take your profit. Sometimes it's best to just take profit at that point, right before it reaches the sessions. Some people are stubborn. They just hold on to it and they let it run farther and farther, and they think price is going to keep pushing up, but it doesn't, right? So say, for example, this person is still in this trade. Say like you're in a signal group. This is like where it's notorious. This is why I don't do signals, because this will tend to happen. Someone will give out a signal. They'll tell everyone to put their entry right here. They're like, oh, go for this big move. And then everyone puts your stop loss right there, right? Same place. So look what happens when price does make its way back down. So price makes its way down, and what happens? The person who gave the signal out, their whole group is fucked now, because they all didn't make their TP, and they got all their stop losses right here. So what happens when their stop losses get triggered? Boom, they all get stopped out, and then liquidity hits it down further. And then the people who don't put their stop loss here because you're like, oh, I'm getting unlucky, so I'm just going to re-enter and I'll put my stop loss down here. What happens when their stop loss gets hit right here? And I always find this so funny, because this is really what happens. It's a big stop loss hunt, because everyone puts their entry right there. They get stopped out. And some people that are just stubborn and they don't take a stop there, they move their stop loss lower to the next low, which is right here. And as soon as this gets hit, it drops and hits the next area of liquidity. Right there, right? And then what happens once everyone gets stopped out? Price goes all the way back up. And what happens at that point? Everyone's mad at the signal guy that gave the signal. They're like, oh, you gave a stupid entry. We should have entered over here. And then price will either go back up. And you can see right here, it tricks people, right? Because people will enter a buy right there, and then they'll just re-enter a trade. Like, this is usually what happens. People will see this push up right here, and they'll think, okay, this drop is done. Price has to push back up. So what happens is people revenge trade, and they re-enter a trade right here. And what happens is they put their stop loss right there, same place, right? They try to do the same thing. They try to make back this whole loss, and they do the same thing. They try to enter again for that same move. And what happens? They get stopped out again. And then what happens here? It pushes right back up. I just find it funny, because I've been a victim of this trap too all the time, but I don't fall victim to this anymore, because I know how it moves. I do the opposite of what these people do. Like, they try to go for these big pushes, and I do the opposite. So again, right here, price pushes up, and they're like, all right, price has to go up now. And what happens? It comes back and stops them out again. So if you got trapped in this one, you're gonna got stopped out again right here. And that's like 4 stop outs right there, right? So if you got stopped out at that point, your account's probably blown. So I don't go for these types of trades, guys. I go for the trades that I know we're going to hit, not the trades that I want to go for the big pushes, but the trades that I know are actually going to win. And I'm sure this has happened to you. I mean, it's unfortunate. It happens to a lot of people, but this has happened to me a lot in the beginning when I started trading. And then I started to use logic to go against this. I'm like, okay, how do I combat this and go opposite? So that's when I started to change things. And now, like, you see how people are trading up? For us, we're actually trading the opposite, because we have liquidity right here. So when price starts to drop right here, like, instead of us buying like everyone else, we're actually selling. So price comes right here, hits liquidity. Instead of us taking buys like everybody else, we're actually taking sells. We're doing the opposite of everybody. So people are here looking to take a buy for the bounce. I'm like, no, I'm gonna take a sell. And yeah, sure, I'm not gonna go for like a whole like 1,000 pips or whatever, but I'm gonna go for 10 pips right here, and I'm gonna hit my TP, right? So like, see price comes down from this point, and I'm gonna enter my sell, and it's gonna hit my TP. And that's how we trade. That's not how majority of other people trade. They try to trade the opposite. So hopefully that makes sense. And hopefully this is starting to kind of click for you guys. Because the thing is, I've been trading for like 11 years now. So I've been victim to this trap all the time. And I just figured out how to not fall for it anymore. So hopefully that, that makes sense for you guys. So other than that, let me see if there's anything else here that I'm missing. So yeah, hopefully that helped out with your guys' liquidity question, because liquidity, I know it's kind of confusing and kind of difficult, but like once you actually understand how it works, like where the liquidity is sitting, because I feel like people use liquidity in like different forms, right? People use liquidity because they think, oh, there's a bunch of orders sitting right there, right? That's what you hear people say all the time. But realistically, there's not a bunch of orders sitting there. There's a bunch of stop losses sitting there. It's not a bunch of pending orders. There's just actually a lot of stop losses right there, so that when price does hit it, it goes through a stop loss hunt. But people use different terms, right? Some people will say, oh, there's a bunch of pending orders there, or there's like supply there or demand there. Yeah, there's supply or demand, but most of the time it's just like a bunch of stop losses from a trade that's been running for a while now. There's just different names for it. So, so some people will call it supply, some people call it demand, some people call it support resistance. It's all the same thing, really. The only difference with us is that we keep track of all of it, right? What will happen is you'll see a lot of people draw like a supply down here, or a demand, or whatever they call it, right? So, or let me do this again. Let me just go back over here and I'll show you exactly what people do. They'll draw like a supply or demand down here, right? They'll just say this whole area, right? But for me, I like to be very precise. Like I don't want to know where the zone is. I don't care where the zone's at. Like, I don't care about this whole, I want to know where the actual lines are, like where the orders are sitting. So like, instead of drawing a big zone like this, I draw like the actual lines. So I know exactly where price is going to hit and it's going to shoot through. One way to really decipher where there's going to be a lot of liquidity sitting too, is that when you see these lines that are right next to each other, right? When there's double liquidity right there, or there's a lot of liquidity like in one area, that's where I would put it. Some people will call this supply and demand or whatever, or support, but I'd rather know exactly where the points are versus where the whole zone's at, because it's the same thing. It's really the same thing. It's just people call it different things, and people look for other things in the market. Like for example, I'm looking for these high lows. Some people are just looking for these big candles. Like there's a big candle right here, right? And it lines up just with my liquidity. So it's just up to preference, guys. I think my way is probably one of the easiest ways to identify, because there's no guesswork. It's not like, okay, is this candle the liquidity? Or is this candle the supply or demand? It's like, nah, you just draw the lines. You don't have to think about all that. Because I feel like a lot of people get tripped up on like overthinking. Like for me, I just draw the lines here. I'm like, okay, I know where liquidity is sitting. For other people, they're like, okay, is this supply or demand? Or is this supply or demand, right? I see people do that all the time. They're like analyzing things forever and they never do make any moves, because you're like, okay, is this a supply? And they're like, no, let me delete this. Wait, this is the supply. Wait, no, this is the supply. This has got to be supply right here. And I see people do that all the time. It's like, just keep it simple. It's really what it is. Keeping it simple is really what you need to do to get it down. And that's what K2 is about, right? I try to make it as simple as possible so that you guys can get this stuff down, because it's really not like, once you get down like the foundational stuff, it's very simple. Like if you can identify where liquidity is sitting and you have momentum, you already know which direction to trade. Like for example, right here, back to what I was just saying, we have the liquidity right here. And let me just show you how you tie this together. And this is this is a speculative strategy that I use myself. So this is one thing that I do as well. And I've kind of showed you guys this before in the past. I just don't do it anymore because I don't want you guys to be taking risky trades. You have to really know what you're doing. So like, say for example, right here, we have liquidity, right? there's a couple of different markers that you can use to identify if price is going to keep going down. You're going to look at retail sentiment, you're going to look at fundamentals, and you're going to look at the technicals. There's key things to look here at the technicals. You can look at momentum, right? We have a sell signal right here. So where do you think price is going? Price is probably going to go down because we have momentum pushing to the downside. What's another confluence? The trend meter right here, right? The trend meter down here. The trend meter is red. So if it's red, where do you think price is going to go? It's probably going to go down. Where's price with regard to the pivots? The pivots are above here, price are below the pivots. Where do you think price is going to go? It's probably going to go down because when price is above here and the trend meter is green, price goes up. When price is below here and the trend meter is red, price is probably going to go down. So when you're taking trades right here, you can identify where liquidity is sitting right there, and you can take moves as price breaks through because you already know price is going to go down, right? Like it did right there. Hit liquidity, momentum's still down. There's no buy signal. It pretty much helps you understand when and where to enter these trades. This is why these indicators are very useful. A lot of people don't like using the indicators, but I mean, this like saves you so much time and effort because you don't have to do it by hand. Technically, you can do it by hand, but who really wants to do that? Anyways, so other than that, let me see if there's anything else that I missed. So Motivated said, makes perfect sense. Thanks, Sean. Yeah, definitely no problem. Let's see, Angela said, thank you, Sean. It's still foreign, but coming together little by little. Definitely, Angela. Let me see if there's anything else here. Sam said, would you use any K2 strategy to find an entry when trying to catch liquidity push? Yeah, I mean, you can use any strategy here. Like for example, like I just mentioned over here, there is liquidity right here, right? And I can keep going back to this example because there's so many, like this is a good area to show you guys examples because it kind of breaks down where a lot of things are coming from. So like what Sam said, he said, if you have liquidity here, could you use a strategy? Yes, of course. Right here, you have a sell signal, right? This is a pivot scalp entry. All right, this is the 1 minute pivot scalp. Confirm a valid K2 momentum signal. It's a valid sell signal, and you want to confirm it's below the pivots, right? This is a pivot scalp entry. If you were to take this, the thing is, I would take a trade like this because you have liquidity right there. So when it hits liquidity, it's going to break through and hit your TP, right? So there you go, full TP. Again, same candle. If you wanted to apply a different strategy, you could apply the intraday strategy, right? For the intraday strategy, you just want to confirm that you have a valid K2 momentum signal. You confirm the trend meter matches, red signal, red trend meter, full TP, right? Same thing. There's another entry right here. If you want to apply the high-low strategy, high-low scalp, same thing. Price breaks and close, below, you enter the trade, and it keeps dropping. So, yeah, hopefully that makes sense, Sam. Like you can apply whatever strategy you want. It's really up to you. That's why I always tell people that you guys should actually go and understand the strategies because there's no one strategy that works all the time. All the strategies work all the time. It just depends on when you apply it. Like for the same candle right here, there's probably like 3 or 4 entries that you could have taken using different strategies. It's pretty simple. Like once you actually get it down, it's pretty simple overall. So other than that, let me keep going on with the questions here. I'm going to see if there's any other questions here relating to the liquidity. If not, I'm going to move on to the next question. Barack said, I was that person. I used to feel like the market personally targeted me. Yeah, no, me too, Barack. I was in the same boat for the longest time. Let's see. Sam said, I noticed majority of the time only the high-low strategy comes up. I mean, not really. I just showed you like 4 different strategies right there that came up, Sam. I don't know if you like forgot about the other strategies, but there's intraday strategy, pivot scalp. There's a lot of strategies you can apply here. There's a bunch of variations. So like there's a variation right there to continue catching the sell. I mean, there's a lot of different strategies that you can apply. It just depends on like what you see there, Sam. Like I can't just use this example. If you wanted me to go back, I could probably find other ones, but there are a lot of different examples here that you could use. So let me see if I could find one more. Okay, so here's another one right here. And this is probably gonna be the last example for this one, so I can keep moving forward. So basically right here, we got liquidity sitting right here, right? So again, right here, you're looking for an entry. This right here would be a, wait, what did I saw something there. Sorry, I think I backed up too far. I thought I saw like a variation here or something. Sorry, my eyes just kind of missed what I was looking for. Oh, like right here. So, sorry, I think I went to the wrong one. But yeah, like right here, there's a V3. Let me just take off the sessions because we're not really using them right now, but I will pull them back up later just to clean up the chart a bit. So again, right here, we have, liquidity sitting on the bottom. Of course, you can draw more, but there is or if you want to draw this one right here too, there's more. Like if you go back all the way over here, this right here is a V3, right? V3 entry. So if you're trying to catch liquidity as price goes down, you can take the V3 down. Just trying to see if I can find anything else here. It's just hard to find liquidity here because this is Asia session or this is a pre-market. I got to find like an actual day where price is actually moving. Like for example, right here, there were some high lows on this area. Yeah, it's someone that CT caught. But yeah, I mean, short answer to your question, Sam, I mean, you have to go back and like actually see it and we'd have to find a better time. But there's a lot of different entries that come up here. Let me see if I can find another one here. I just want to give you at least one example to kind of show you. This is all pre-market right here. I don't think we're going to find anything, but okay, there's another one right here, which is it's a V3 and it's also a V1. So right here, we got a bunch of liquidity right here on the bottom. I think the reason why you only see a high low, Sam, is because you're looking for a high low. Because when you're looking at the lows over here, you're specifically looking for a high low, but you fail to like notice that there's a V3 right there, right? And then double body. So this is a V1 and a V3 right here. So I think you're just training your eye to see, like you're specifically looking for a high low. Because the thing is, when you're looking at these liquidity areas, the only entry you can get, because the strategy requires that it breaks and closes below. So you're specifically looking for a high low. But if you look closely, there's a lot of different entries that come up. There's pivot scalp entries. There's intraday entries. Like for example, not this one, this is invalid. Like this one right here, right? Let me just go over here and I'll show you real quick. Okay, so this right here was breaking liquidity because there was liquidity right there. And this is considered a pivot scalp entry because there's a sell signal, trend meter is red. It's also a pivot scalp entry. It's an intraday pivot scalp entry, a high low entry. So this is the high low that you're looking for. You're always like, this is what you normally see because you're looking for the line there. But there's a bunch of entries at this point. So if you were to take, the entry there and not take it as a high low, but take it as an intraday entry, which is the same thing. I mean, it doesn't matter. It's basically a triple confluence at this point. You would take that and hit your TP at some point. So I forgot what else I was looking at. There's another one that was right here. That. Yeah, like another one right here, which was pivot scalp. I mean, not pivot scalp, but V3 and a V1. So like, for example, right here, I would have taken this one because we have liquidity right here. So I know it's going to go and hit TP and continue pushing further. Price pushes, it hits my TP right there for the V3 and V1, and then it just keeps pushing. So hopefully that makes sense. Yeah, Sam said, I usually watch mid-market reversal because there tends to be more liquidity and I look for entries I would possibly take. I mean, there's liquidity on at all times, Sam. So if you look at the market before market open, you're going to get the liquidity that's built up during London session. So like every morning when I draw the liquidity, that's liquidity that builds up over London session. Same with you. Like you look at the mid-market reversal because that liquidity is built up during the morning session. So basically, you trade from 6 to 8. You look for the mid-market reversal at 10 or 11 or 12, and all the liquidity was built up. So we're doing the same. We're doing the same thing that you're doing. Or we're just doing it hours before you, because every time the liquidity gets hit, there's new liquidity that gets built, right? So if we're looking at 6:30, there's liquidity that's built from midnight up until 6:30. That's why I draw liquidity on open. So like, let me go over here real quick to 6 o'clock. The liquidity that I draw is from London session. Like we trade right here at 6:30, right? All this liquidity right here is from London session. And I think you might not have like realized that, but so like for here, all this liquidity that we draw is from London sessions from midnight up until now. For you, you look for the mid-market reversal, right? So you're doing the same thing, you're just doing it hours later. So like, again, right here, you look at like around 10 o'clock. So you're just doing the same thing, it's just later on in the day. Because the thing is, this liquidity gets hit, and now that you're trading at 10, or you're looking for the mid-market reversal, here's 10 o'clock. You're just drawing the same liquidity just later on in the day, because we did the same thing on open. Now you're looking for the liquidity from 6:30 up until now. Does that make sense, Sam? You might have not realized that, but you're doing the same thing. It's just at a different time frame, like a different period. Yeah, but it's the same thing. Yeah, so I don't know if like you realize that, or like that was something that you knew, but you're basically just doing what we're doing. It's just we're not trading at that period. We're trading earlier, and it does the same thing during Asia session. So like during Asia session, you'll have it slow during Asia, and then as it gets close to London, it'll start to knock out that liquidity, and it'll just create new liquidity. That's why for me, I only keep the liquidity up from the previous session. I don't go for the entire day because it becomes irrelevant at that point. Other than that, let me scroll up real quick. Sorry, CT, I totally missed your question there, or your comment. I couldn't scroll back that far. Let me scroll up now and see what else I missed. Henry, I haven't gotten to your question yet, so I will get to your question once I scroll back up. Let me just make sure I didn't miss anything here. Yeah, Mauricio said greed kills you in the market. Exactly. That's why I'm content with just making quick profits. Be Motivated said great liquidity explanation. So basically, the most liquidity is after market open, is where market is likely to go during mid-market reversal. If the liquidity is at the bottom, price will likely not always grab liquidity and drop. Yeah. So it kind of goes back to what I just kind of mentioned, Swelly. Like basically the we draw liquidity from London session because we trade the open of New York, and then it's the same thing for the mid-market. Like mid-market, you'll draw liquidity for the previous. So like for example here, what was I looking at? Okay, so like right here, shooting out right here. So for example, right here, there is a there's liquidity sitting right here. But this is from like the previous day, or not the previous day, from the earlier morning session. So you got liquidity sitting right here, and then here's mid-market, right? So you're looking for the reversal. Basically, price was bearish through this part, and then now we're expecting it to go up and trigger the rest of the liquidity. So if you go forward, you can see that the liquidity is getting triggered right there. And there you go, so price pushes above further. So yeah, a quick answer to your question is yeah. I mean, basically when liquidity gets knocked out here, you're just waiting for a price to swing back up and hit liquidity the other way. Okay, next question, let me scroll up real quick. Barack said, so I find that after drawing liquidity zones, I'll hunt for the V3 at retracements towards the liquidity with a tight CP. Yeah, no, that's a smart move, Barack. I do that too sometimes. Brock said on liquidity, I noted it will always keep the direction it chooses. I get vital aspect on bias and trend. For example, on your screen, the first liquidity for the market to hit will be in the direction it will keep until it exhausts all liquidity. Yeah, no, and you're 100% right, Brock. That's what I just like the same thing I kind of mentioned here. Price hits all liquidity below here because all liquidity was down here, and then it swings right back up and hits, the rest of the liquidity that's up here. And it's the same pattern. It repeats itself every day. Other than that, let's see. All right, Matthew, I see your question right there. I'm going to scroll up real quick. I just want to make sure I knocked out all the liquidity questions so that we can move on to the next ones here. All right, let me scroll down real quick. I'm gonna make sure I'm not missing anything. Okay, so liquidity is done. The next question is from Joshua. So Joshua is asking, hello, Sean, can you go over the best way to set buy, sell stops at MT4? I see the feature in DOM, but what is most efficient way to, I mean, you gotta be really quick, Joshua. So like what I do is I'll just click where I want my buy stop or sell stop to be. I'll right click on the chart. And then if you go to trading, you can, there's an order there where it says set buy stop. So I can't show you on my chart, obviously, but I'm just kind of explaining it. I just click where I want my buy stop to be. It's not going to be the same exact price. Like the price is not going to be perfect, but you can just zoom in as close as you can with the magnifying glass, right click where you want the buy stop to be, go to trading, and then set buy stop there. And then it'll set your, it'll set your buy stop at that point. That's the fastest way to do it. And then once you set it, you can edit the settings. Like you can go into the pending trade and then you can preset the TP stop loss. It's not something that is easy. Even for myself, it still takes some time. Like I literally have to go on real quick and then I have to go and edit the TP stop loss by like 100 pips or so, wherever my TP stop loss is. So that's the easiest way for me to do it. I don't know if you've tried it before, maybe try it on a demo. Just right click on your MT4 chart, go to trading, a drop down will pop up. It'll say sell limit and buy stop, or it'll say sell stop and buy limit, depending on which direction you're trading in. But that's the way I do it. And you just have to, you start to just, it becomes easier the more and more you do it because it's just a simple process. But that's how you would do it. I would just right click on the chart and then set it from there. And then you can edit it right after. Yeah, and I wouldn't use a DOM for it. I tried the DOM. I think someone mentioned it the other day. I tried the DOM that kind of screwed up one of my accounts. So I wouldn't use the DOM as a buy stop, sell stop, because the DOM is technically a market entry tool. So one second, guys. I'm going to go grab some water real quick. I'll be right back. All right, guys, I'm back. Let me scroll up real quick and see what is the next question here. Next question is from Barack. Barack is asking, hey, Sean, what is your advice when you take a trade in 5 minutes and while in it, an opposite entry shows in a lower time frame? I've been in a 5-minute V3 sell, which has a 1-minute V1 buy. So if I'm on the trade for the higher time frame, I just stay in it because the thing is, here's an example. Let me see if I can find one here. I mean, I probably can't find an example here, but we had one that was running on, I think it was sometime this week where we had a 10-minute running, and then you would get some opposite trades for on the lower time frames. I can't remember where it was. Let me see if I can find it. If you guys remember that day, I can pull it up, but I know it was a sell on the, I think it was on this day on the 14th. It was this one. Yeah, it was this one. So it was on the 14th during the live session. So we had one here on the 10, and we did have opposite entries. Yeah, this is one that was like 150 pips or 1,500 pips. It was a big move. We had this running here. And if I was in on the 10, it wouldn't really bother me on the 1 because you're going to get opposite entries that come up. So if I go over here to, because I remember we were like, some people were kind of freaking out about these trades here. All right, like for example, like right here, this was a V3, right? At like 709. So like 709 right here. At this point, price starts to push up, right? So this is where you would get an opposite entry. So for here, you would have a, right here. This is like exactly what you were talking about, right? You're like, oh, what would you do if you were like in a higher time frame trade? And then you get an opposite right here on the 1 minute. For me, it wouldn't matter because for the 1 minute, you're only going for like 100 pips, right? So if you're going for 100 pips, then your drawdown here is only going to be 100 pips, which is nothing, right? This is how it looks like on the 10-minute versus on the 1 minute. So if I get an entry on the smaller time frame, it's not really going to matter to me because it's going to push up and then it'll just come back down. So that's like one thing that it's hard for me to stress it to you guys. Like, you guys can't second guess your trade, and I'm pretty sure that's why you have this question, Brock, because you kind of second guess it, right? You're in a trade for a sell, but then you get a buy here on the 1, and you're like, oh crap, okay, this hits. But here's the thing: price will hit, and then it'll just come right back down, right? And then eventually it'll just come back down. So it just keeps bouncing around that area until it makes its way back down. So as you can see, it just makes its way back down at some point, bounces around. I never get scared of it because if I'm on the 10-minute, if you guys have seen, the 10-minute almost always hits for me. I haven't lost a trade on the 10-minute using the V3 ever. So you can see right here, it does bounce around a lot, but it does hit CP eventually. So yeah, so I would always focus on the higher time frame. If you have an entry on the higher time frame, that would trump anything on the lower time frame, but you can also trade within. So like, for example, here we took trades in both ways. I took buys and I took sells. Like even though, because, it's what it gave me. So yeah, I mean, it's all about just trusting the move, but I would definitely focus on the higher time frame moves versus the lower time frame moves. All right, so let me scroll back up. Next question is from Fahad's asking for the stop loss. Sorry, Fahad, I totally lost your question there. So your question is for the stop loss. Do we do 1030 and not? Depends on the strategy, Fahad. So if you're applying the V3, it'll be at the swing. If you're doing the V1, so the V1 kind of varies. You can do 2 different ways. You can either do the fixed 100 to 300, or you can put it at the previous swing. If you want to put it at the previous swing, you want to have it at least 300 pips. So it kind of balances each other out, right? Because sometimes, I mean, either way, your stop loss is going to be 300 pips either way, if you do the fixed or the variable. But it just depends on what you want to apply. But yeah, it just depends on, you're going to have 300 pip stop loss either way. So you'd probably just be better off with the fixed if you're feeling risky. If you're feeling confident, then go for the bigger move. Henry, haven't answered your question yet. We're still at the top. So if you go up, Henry, you'll see which questions I've answered, but I haven't gone to yours yet. I think yours is coming up. Let me scroll down real quick and see what is next. Okay, here's your question, Henry. I'm right. I'm at it now. So Henry said, Sean, I came in late. So if you covered it already, can you cover the step-by-step process for opening a trade breakout? You have written them down. Wait. Sorry, Henry, I'm totally confused with your question. So your question is, can you cover the step-by-step process for opening a breakout trade? You have written them down for V3 and V1. So you want me to cover the breakout? Sorry, because your question is kind of like mixed up. I just want to clarify. You want me to cover the breakout, the V1 and V3, right? If you could confirm that, would be great. Because your question here is, can you cover the step-by-step process for opening the breakout? You have them written down for V3, V1, because they're totally different strategies. Oh, just the breakout. Okay. Yeah, no, definitely. Sorry, I was just confused because I thought you wanted me to cover all of them, which I could have, but I'll just show you the breakout. I'll show you the breakout from Monday. I mean, on Monday, Friday, or today's Friday, Thursday. So here's the breakout from Thursday. I have another video too, if you want to watch it, Henry. It's not on the, I posted on the group. So if you looked on the group over here, Henry, I posted a new breakout video, which is going to cover this, but this is just going to be, I'll just review it again. It's not that difficult. Here are the requirements for the breakout. So basically what you're looking for is you're looking for an entry after New York Stock Exchange open, which is 6:30 a.m. So this is opening candle right here. As soon as market opens, you can take even the first candle. So this is the first candle right here. And if you get all the requirements, then you can take it. Let me just go back one candle so I can show you from the beginning. Okay, so market is not open yet. This is 6:29. You're looking for an entry after 6:30. First and foremost, you want to confirm the bias. It's optional, but it's highly recommended because, obviously you want to trade in the direction of bias. We're just going to assume that today bias was bullish. We can't pull up the retail sentiment or fundamentals because the market is closed, but just looking at the technicals here, price is above the pivots, trend mirror is green, momentum here is bullish. So we can just assume that the bias was bullish. So going back to the third requirement here. So we have requirement one, we're looking for an entry after open. We confirm the bias, we're going to assume it's bullish. The third requirement, we want to confirm the direction of momentum. So to do that, you're just going to look back and see where the most recent momentum signal is. It's a green signal right here. So it's indicating that momentum is bullish. So in this case, you're only looking for bias. The fourth requirement, you want to confirm a strong candle in the direction of momentum. So like, for example, here, in order for us to have a buy entry, we need a strong green candle with little to no wick on the top side. So let's go to the next candle right here. This is market open, 6:30, right? You can see here that the wick on top isn't really that big compared to the body. So the wick here is not that big. It might be big to some people, but for example, if you compare it to the body, I can measure both here. The body of the candle is 500 pips. The wick is barely like 100 pips. So this is like a 5 to 10 ratio, right? Or a 5 to 1 ratio. With that said, you have all the requirements here. So we looked for the entry after 6:30, which is right here, the opening candle. We confirmed the bias was bullish. Momentum is bullish. We have a strong green candle right here. You would enter right here for a long position. You set your TP stop loss to 500 pips. To fix TP stop loss, you let it run, and there you go, full TP. So that's how you would apply the breakout strategy. If you want to look at this like breakdown again, Henry, just look at the channel over here. This is going to be on the course later on, but it's not on there yet. But yeah, for example, right here, you would just click on this, and then it would explain to you pretty much what I explained here, but in a more concise breakdown. So other than that, I think that's it. See, Angela's asking, let me scroll real quick. Angela's asking, which chart are we looking at, Sean? I just have one chart on my screen right here. I'm not sure if you're seeing something different. This is US 30. It has the asset right here in the middle. It has a time frame right there next to it. So we're looking at US 30 1 minute. The market's closed right now though, Angela. So I'm not sure if you're like, if you think we're live trading. We're not live trading right now. This is a mentoring session. So we don't have like none of this is real time. The market's closed today for the holiday. So you can see this is real time now, but the market's not moving at all. But yeah, we're looking at US 30 on the 1 minute. I think you had another question above here. Angela said, I hope this isn't a stupid question, but are the strategies on TradingView? Mine are locked when I click on them. Sorry, I'm new. So let me see. How do you find the chart? Sorry, Angela, I'm kind of confused with your question. Are you like, you don't have a chart here on your screen, or do you have something there? Yeah, because I'm not sure what you're at. You said you can't find the chart. Like, are you on the chart or are you on the TradingView website? I'm trying to figure out like where you're at, because the chart, I mean, if you're on the website, you just have to open up the chart. But yeah, I mean, maybe you are answering it right. If you could ask it, or if you want to show me, be more detailed or show me a screenshot or something, I can tell you how to get to the chart. But I'm not sure if you're like on the chart or if you're on the TradingView website, or if you're like not even on TradingView at all. Okay, so you said yes on TradingView, but still confused out with where you're at. I'm not sure. Are you on the website? Because this isn't the website. This is the charts. Because you're asking how do you get the chart? This is let me see if I can pull up the website. I can't pull up the website because I'm on the actual app. So are you trying to get this like this screen up here, Angela? Are you trying to get somewhere else? Because if you need to get on this screen right here, let me just pull up the TradingView website. All right, so I don't know if this is where you're at. This is the website. If you need to get on the charts, there's a chart button right here, and this will bring you to the charts. Okay, yeah. So you can use the app. I use the app, but if you're trying to get to the charts here, this is how you would get to it. If you're just on the plain website, there's a big button here that says chart. You just click on that, and then it'll go to your chart here. You have to log into your account though. I can't log into mine here because I'm logged in on my actual app. But once you get to that point, I think that's pretty much, for the most part, I think that's pretty much, it'll get you to that point. So once you're here, if you still need help, let me know. I don't know like where else you need help with, because if you're on this chart right here and you need to get to US 30, you can just type in US 30. We use currency.com data. It's gonna be the first one. And that's how you would get to US 30 right here. Your time frames are going to be above here. So you have days, we're on 1 minute. So you go to 1 minute, and then you'll get exactly what we have over here, but on your own chart. So I'll let you get that figured out, Angela. I'm going to go back up because we have a lot of questions that I haven't gone to yet. But I'm going to scroll up and then, okay, let me see. I'll just answer your question now. Yes, or here, I'll just help you right now before we move forward because I'm already helping you with this. So what else do you need? You said your indicators on there. So are you looking how to get the indicators, or are you, I'll just wait. I'll see. Just like put an actual question there, because I'm not sure what you're asking for, because you just said your indicators on there. Are you trying to find the indicators, or are you looking for something else? Because this is what yours, like you should be on a clean chart. I deleted mine already, so I can't pull it up, but yours is probably looking like a clean chart. If you're looking for the indicators, you click on indicators right here, and then you go to your invite only scripts, but you would have to log into your account. It seems like you might not be logged into your account. So you'd have to log in, go to indicators, and then you'll have this invite only scripts button right here. Everything will show up as K2 right here for your K2 indicators. I'm pretty sure you gave me your username, so you should be fine. What color is the lock? Is it green or is it red? Because if it should be green. Because if it wasn't green, it wouldn't show up here at all. If it looks like this green, this means that it's unlocked. If it's red, that means that it's locked. So I think you might think that you might be thinking that it's locked, but the green means that it's unlocked. You can just click on it up on your screen. And it's a common problem. A lot of people think that it's locked, but when you click on it, it gets put on your screen. There's two different lock colors. So did you get that, Angela? Let me make sure. Yeah, because if you didn't have access to them, you wouldn't even have this thing here. Like this tab wouldn't even be here if you didn't have access to it. Okay, awesome, cool. Glad I could help you with that. It's all right if it's all new to you. Like a lot of people have the same issue. All right, so got that done. We're good. Let me scroll up real quick and then move on to the next question. No, you're fine, Angela. I know this is all probably brand new to you, so you're still getting the hang of things, but now you got it, so you're solid. Other than that, let me scroll up real quick. I forgot what question. I don't know if, okay, so Henry got it. I just went over your question. Let me scroll up real quick and see what's next. All right, Henry's next, or sorry, not Henry's question. Okay, Sam said, hey, Sean, what's the minimum stop loss you look for on the 10-minute V3? I would use 500, Sam. I mean, it just depends. You know, sometimes if you're trading during Asia, you have to go for like smaller, like maybe 300. But for the most part, I don't even trade this. Well, I don't trade during Asia anymore. But basically, I took a couple entries here, like also this one pre-market. I think I took this right here as well. And you can see from this one right here, because it's still pre-market, so the market's kind of slow still. But if you were to take this one right here for a buy, you can see it's about 300, right? So pre-market, market's going to be a bit slower, so you can use 300 or so, and then it still hits perfectly fine. So it just depends, you know, on like what session you're trading in. If it's pre-market, it'll be slower. If you trade during, you know, US session or New York session, it's going to be a lot wider. The thing with the 10-minute is that you have a lot more leeway, because the thing is you can enter a trade and it can be a big move, and then you can still pull out prior. Like for example, here, when price was below here, you could have pulled out already, or you could have just held on to it for the full move right there. So it just depends on the volatility in the market. Yeah, if you're only applying it during New York, then I would probably only use it with a 500 pip stop loss, because you want to have some sort of cushion just in case, you know, the market starts to act kind of funny, which it does from time to time. Here, let's see what else we got here. All right, the next question here is from sorry, let me scroll. I want to make sure I didn't miss anybody's question. I'm on Michael's or Matthew's question. Let's scroll up again. Sorry, I just get a lot of questions, so I can't want to miss anything. Scrolling down. All right, question from Matthew. Okay, Matthew. So Matthew's asking, I know 3-minute daily is not an official strat, but can we go over that? I've had a couple people message me asking about it when I post profits from it. Yeah, guys. So basically the 3-minute, I haven't tested it enough to really like confirm that it works well, but it seems like it works pretty good for some people like Matthew over here. He's been applying it. It's been like doing him good. So let me see if there's anything that I could find here. So the thing with the and this is another thing that I'm gonna have to confirm in the because I could see that the actually no, that was right here. So let me go over here real quick, because I don't know what the bias was here, but here is the 3-minute daily. I'm gonna add the bias to all of these here. So it's not necessarily like 100% required, but it's gonna be beneficial. So confirm bias, retail sentiment, fundamentals, mental sentiment, technical. All right. So I'm just gonna add this to like pretty much everything, because this is something that I've been stressing for everybody, because it I mean, it helps a lot, right, with determining what trades to take. So let me just update this. This is K2 3-minute daily. All right, so basically what you're looking for here is you're looking to confirm the bias. Obviously, we can't confirm the bias here because we're later in the session. We're just going to assume that this is a sell bias. We'll say that this was a random push to the upside and then it was coming back down. So we're going to assume that this is a sell bias. We're looking for an entry after 6:30 a.m. Pacific, which is open. It can't be on the opening candle, but it can be anything after it. So market open right here at 6:30. This is the first K2 momentum signal after, and that's going to fit the third requirement. So first requirement, we confirm the bias here was a sell. We're going to assume it. Second requirement, we're going to look for the entry after 6:30 a.m. 6:30 is right here. Third requirement, you want to confirm the first valid K2 momentum signal. There's no signal from open here up until this candle, which is a valid sell signal. And it's valid because we have a sell signal within a red candle within a red sell signal right here. So with that said, you'd enter on the open of the following candle right here. You'll go for 500 pips to fix TP stop loss, and then you let it run, and that's pretty much it. So full TP off that right there. Let me see if I can find the one from the day before. I don't even know if we took the one the day before or if it was a good one, but super choppy market right here. Yeah, so let me go over here again. Same situation. I'll mark up 6:30. So here's an example where you won't take this one because it's on the opening candle. I mean, I don't know if that, I can't remember if that was like a fixed requirement. Let me check real quick, because I haven't tested it enough. Yeah, I put after, so it's got to be after the opening candle. This is the opening candle right here, 6:30. So between 6:30 and this candle right here, there's no other signals. Same requirements. We're gonna, and I can kind of tell that it was bearish because you can see right here, price was bearish. It just pushed up on open, but then it came, right back down. So for this right here, same requirement. We're gonna assume that it was bearish. For the second requirement, we're gonna confirm that we're looking for an entry after 6:30. This is the first one after 6:30. And third, we're going to confirm the first valid K2 momentum signal. Right here is a valid sell signal. It's a red candle within a sell signal. And we're going to enter on the open of the following candle again right there for 500 pips. We let that run. There you go, full TP. So it's a pretty simple strategy. I mean, I haven't tested it enough to really confirm if it's really accurate or not. Seems like a handful of people in the group do apply it. Sometimes it works, sometimes it doesn't. I think the main thing that you'd want to confirm is the bias though. So if you have the direction of the bias, I think you'll be perfectly fine with taking the daily in that direction. So other than that, all right, Kenny, we'll see you then. Kenny's heading out. So let me just go back over here. I'm going to scroll back up and see what else. Barack said, what time was that on your chart, Sean? So I went back to 2 previous days. The one I went to the one from Thursday, and then I went to the one on Friday. I mean, why do I keep saying Friday? Today is Friday. I went to the one on Thursday and the one on Wednesday. So I went back to yesterday on the 14th at like, it's right after open. And then again on the 13th, same thing, right after open. Because that trade has to happen before, like during the live session. Yep, 13 and 14. So you can go back to those 2 days and you'll find it. No problem, Brock. All right, next question here. Let me scroll up real quick. All right, so I'm done with Matthew's question. I answered Brock's question over there. Answered Squelly's question. All right, scrolling down a little bit. I think that's it for the questions. Let's see, John's asking, and that's no matter what the trend meter says. Yeah, we don't use the trend meter really to determine any bias, John. I mean, you could use it. It's like, it wouldn't hurt to use it because as I mentioned over here, so let me go back over here real quick to the bias confluences, right? So for the bias confluences, the trend meter is going to fall under technicals, right? So it's not necessary, but it's going to help your odds of having a better understanding as to like what direction price is going, right? So you don't necessarily have to use it, but you know, if you have retail sentiment and fundamentals already in one direction, then the technicals don't really matter because the technicals are going to follow. They might not be following at that specific time, but eventually they're going to follow because these have heavier weight. So trend meter doesn't matter. I mean, it's not like end all be all, but say for example, you're looking for a sell and then the trend meter is also red, then that's going to increase your confidence that price is probably going to keep dropping. So no requirement there, but it's helpful. So I would still look at it. That's why I leave it on my chart, even though I don't necessarily use it. It just helps with identifying certain things. So yeah, hopefully that helps with that. Next question. Brock said Monday's still a bank holiday, isn't it? Easter Monday. Easter's on Sunday. I don't know if it's closed, but I mean, I guess we'll see. I'll have to check the closures, but I don't think it's closed on Monday because it was already closed on Friday. That's kind of crazy. You know, you have, it's like Christmas holiday. Friday's closed and then Monday's closed too. It's kind of a long time for the market to be closed. So, I mean, we'll see. I think it's open though. Yeah, so thanks, CT. CT said the US markets are open. It might be closed in other countries, but not here in the US. Question from Sam. Sam's asking, Sean, could you look at the 10-minute V3 entry on April 12th at 10:20 a.m. your time? It lost, but I think it was because of the mid-market reversal. Yeah, so the time, just by looking at the time that you mentioned, Sam, I would already assume that it's because of the mid-market reversal because it does happen at 10. So you said April 12th at 10 o'clock. April 12th, 10:20 a.m. Oh, you're looking at this one right here, right? Yeah. So let me go back over there real quick. So here's one thing that I can't really confirm, which I mean is not necessarily going to be a requirement, but there's a couple of red flags here. One of the big ones was that you mentioned that it was mid-market reversal. So like for me, I only trade US from like 6:30 to 8, right? So I'm only trading between like if I see something during this period, I'll take it. And I think the biggest red flag there would be, so this is the only time I'll pretty much be trading. This is the only time if I see any entries over here, like for example, this one right here, I would have taken this one and that would have hit full TP right there. Yep, would have hit full TP right there. That one I would have taken. I wouldn't have taken anything outside of here. The biggest red flag, I think, is the mid-market reversal because it is at 10. So as you can see right here, and it's kind of a clear picture too, you kind of see where it moved. So right here, price kind of consolidated, pushed up a little bit, and then it seems like it, might have just come back down further, which is basically what happened there. The only other thing that I would probably be looking at would be the bias. So I'm not sure if like the overall bias was already a sell. This could have just been a retracement. But yeah, for the most part, I think main reason why I wouldn't have taken it would be because of the mid-market reversal. So a couple of things, mid-market reversal, news too. So here, yeah, April 12th. I think there was news on that day. Let me check. Yeah, so there's a 10-year bond auction and then federal budget balance, and Fed member Brainerd was speaking too. So there's actually news on that day, Sam, on Tuesday, April 12th. So the entry was at 10. And the thing is, I know this because I remember I was looking at that trade. This is when I was testing it. So on that day, and there was CPI too. Yeah, so this was a heavy news day right here, Sam. So we had the inflation news, which was negative. Obviously prices, I think this whole day, the market was like super bearish. That's the reason why I took I would have taken the sell there. Let me check my profits real quick. I think I did take sells on the 12th. Yes, I did. So I took sells right there on the 12th because I forgot what I took. Oh, we took the buy for the breakout, but overall we were taking sells. So like my trades here after were all sells because the inflation news was negative. So I think there goes your answer right there, Sam. There was news that day, which was indicating sells. So the bias was overall a sell for the entire day. There was also news that morning. So I think it was just bad timing for an entry like that. That's why like you still have to use like not necessarily the bias, but use other things like other factors. Like if there's inflation news or something big happening, just avoid the trade. But I remember I did take, I don't know, I took something here. I can't remember which one I took, but I took the breakout and then I took the sell at some point here. I think this is the reason why I took the sell because I saw this and then because I could see my timestamp. I took that trade at 710. So I think I already had this marked up right here. And then we saw like another entry come up. So I just entered it for a sell. So yeah, and that's good, man. Thanks for the teamwork right there, CT and Sam. All you guys kind of helped with understanding, what could have been done differently and how to avoid unnecessary losses, which is helpful. I mean, the thing is, if you can keep yourself from losing, that's like the main thing. What else we got here? So I think that might be it for the week, guys. I don't know if there's anything else that you guys have. If you guys asked a question and I didn't get to it, go ahead and put your question in the chat. Sorry if I missed it, but I didn't see anything else here. Looking over my profits for this week so far, I mean, I'd had a pretty good week. Hopefully you guys had, just as good of a week, but yeah, I know for sure I overall had a pretty good week. This is pretty much what I did for the week so far. I didn't have any losses this week. So to wrap up the week, April, what is this, week 2? 13734 plus 15044 plus 14250 plus 14170 plus 9900. So this is just from the week so far. So I had a great week, guys. Hopefully you guys had a great week. You've been on the live with me every day this week. So, I mean, you can't fake live trading, guys, right? I always try to remind you guys that like, it's all about consistency, man. If you guys can do this every day, and I only trade for an hour and a half. I don't trade, and I only take a few trades. Like for example, from the start of the week up until now, I made on 11th. Okay. I kind of overdid it on Monday. So this is just, I was getting back into the swing of things. So I took like 3 trades on this day. I normally don't take 3 trades. I take maybe like 2 trades or 1 trade, but I took 3 trades on Monday, all won. I took 2 trades on Tuesday, all won. I took 2 trades on Wednesday, all wins. And then yesterday I took 1 trade, or actually no, I took 2 trades, took 3 trades actually, and they all won as well. So yeah, if you guys can be consistent like that, that's really the key, guys. It's all about consistency. I mean, if you guys can keep it up, it adds up, guys. It adds up. So other than that, let's see if there's anything else here. Question from Brock. Brock said, Sean, when doing high lows, do you need to count the candles we have? If we have the K2, yes. I mean, you have to, because it's not going to set, like, you have to have the X amount of candles. It's like one of the requirements, Brock. So you still have to count the candles if you're applying the high-low strategy. That's like one of the main requirements. I mean, this is the only strategy that requires that you count. So yeah, you have to count it for this one specifically, because it's specifically for this strategy only. I don't know if you had another question, Brock. I did answer all the questions, I believe. So I don't know if you have another one that you want me to cover or one that you want me to review real quick, but I did answer all the questions. I'm not sure if I missed yours, but I'm pretty sure I, oh, never mind. Sorry. That's the question that you just asked. Yeah. So, yeah, let's see. I somewhat thought that it prints high-low after counting. No, it doesn't. So like here, let me show you an example. I mean, that's the whole reason we have the requirement there, because it repaints. It repaints until it's established. So you can see it more often when price is kind of choppy, like this right here. Okay, so you can see how there's a low right there, right? It's going to keep repainting until it catches. That's why you have to wait for it. So like, for example, right here, you're going to get high 1, 2, 3, 4, 5, and then you have another low right there. And there's a high right here, 1, 2, 3, 4, 5. It's going to, it'll repaint. That's why you have to use the requirement to confirm it, because sometimes if the market's moving too fast or it's choppy, you guys will see how we get invalid signals. Sometimes we get invalid high lows if it just moves too fast. Like for example, right here, we have a low over a low. So it's 1, 2, 3, 4, 5. This is the fifth one, but it's higher than it. So it's not lower, right? Because if it was lower, this wouldn't be here. This would have disappeared. But the thing is, this is higher. So that's why it still counts it. Yeah, no, you're no problem, Barack. All right, guys. So I think that's it for today. If you guys have any other questions, feel free to reach out through Telegram or email. Otherwise, we're going to wrap this up. So I think that's it for this week. The market is closed, so I'll try to wrap up the session, give out the breakdown of this week's trades. And then if I have anything else to add to that, I will post it in the group. So other than that, guys, happy Easter. Have a great weekend. Be safe. Have fun. De-stress, guys. I think that's the main thing I got to remind you guys. De-stress. I feel like a lot of people are on the charts on the weekend still, which I get it. It's addicting. You want to get better and better and better, but you need to have that rest. So don't overwork yourself, guys. Enjoy your weekend. You need a break from time to time, or else you'll get tired of trading. So other than that, guys, have a great time this weekend, and I will catch you guys back here